Job tenure is extremely low, 3 years on average. So that means every 3 years, half the workforce that, is changing jobs, which is much lower than either the coordinated or the liberal market economies. And I think this is often ignored in lots of studies of Latin America, and I think it's crucial. Sometimes it comes up in publications as, oh, this is a positive sign that these economies are adjusting. There are new opportunities, they're shifting out of, particularly in the 1990s, they're shifting out of the old import substituting industries into new ones. But I think when you start to look at issues of skills, this becomes a real cause for concern. Now, the implications of this are pretty interesting, because you think, first of all, as I mentioned, the more you're trained in the firm, the less that firm is hiring those skills in the market. So the less apparent demand there is for those skills, and therefore the less individuals would want to invest in those skills in order to get hired at that level. So in fact, many workers are out there looking for the jobs that will allow them to get the education they want, rather than getting the education they think they need to get the jobs. Somewhat perversely, the returns to education in Latin America are higher for children from middle class and wealthy families than for individuals from poorer families. It's the opposite in Asia, where the returns are higher for individuals from poor families. So this is sort of, if you segment it out, you have an overall level of returns to education, but if you're in a poor family, you're in a much riskier position. So that, there may be a good return overall to education. You may earn, on average more, but if you're from a poor family, you may think, well, I might get that, but then again, I probably won't. So it's probably, at least for some families, a disincentive for investing, particularly in higher education. If you talk to people in education ministries, you say, does business ever pressure you, or do they tell you what they want? And they say, no, they're just absent from the debate. And it's partly because they found private solutions to their skill needs, which is in-house training. So they don't need to really press for greater public investment. And the Vale example is sort of the exception that proves the rule. They tried to get this done, but then could not. And with the multinationals, of course, they base their decisions on existing pools of skilled workers. And if it doesn't exist in a particular country, they will shift operations to some other country where they can find those skills.